हेलो। तुम जूम मीटिंग में है? जूम मीटिंग में है? अच्छा, कर दिया है लग रहा है तुम। इसीलिए हम अभी आए तो तुम्हारा नाम देखा।
হঠাৎ এই কথা বলছো কেন? যা বাবা, এটা রাখুন। এসব কথা যেটা না বলার এসব কথা বলে কি মনে হয়? কোনো অযথা কথা বলার দরকার আছে?
पोस्ट हुआ है तो पहले वाला हो गया क्या 2 घंटा में? कुछ भी चल रहा है, अभी हो जाएगा। हो गया तो कि LIC वाला तो पेपर आया नहीं, नंबर आ गया अपना तो भेजना पड़ेगा फिर। हाँ तो रेडी तुम्हारे पास है ना पेपर सर? हाँ मेरे तो भिजवा देंगे फिर।
Good afternoon, everyone. Good afternoon, Mr. Sanyal.
Yes, good afternoon, Devayon.
Good afternoon. It's already 2 p.m. and
Yes.
we generally start this when we have 20 participants. So since we are more than 20 and it's also 2 p.m., we will not waste time and we will start the program. At the very beginning, friends, let me tell you that the Association of Corporate Advisors and Executives is holding these GDs regularly, and we will come up with more programs like this, some of which will be relevant with the time and some which would be a bit future looking. Friends, in the beginning, I would request everyone, if possible, obviously, to rise up because we would be playing the ACAE motto song. Thank you, everyone. Friends, today we have this topic of GST annual return, and we have amongst us CA Abhishek Sanyal, who would be the initiator of this group discussion. Let me briefly introduce CA Abhishek Sanyal. Uh, he's a BCom graduate, passed his chartered accountancy in November 2010, and he initially joined the PricewaterhouseCoopers. Later on, he had a knack for practice, so he went on to joining his father as a partner in his firm. He was initially interested towards indirect taxes and thus started his practice in service tax. And of course, when the GST was coming, he got very much involved with GST, and slowly he shifted toward GST practice, and he regularly appears in front of the various uh, appellate authorities of the GST. He is a regular speaker as well as writer regarding GST matters in various professional bodies. Life member of DTPA. He's a mentor cum faculty instructor at Premium National Portal of TaxCan Academy. He's also actively interested in financial markets, stock exchange, mutual funds, and personal finance areas, as well as investor awareness. Besides being a chartered accountant, he has interest in the field of Indian classical music, sports, photography, content writing, and he's a member of the Outram Club as well as East Bengal Club. It gives me immense pleasure in once again welcoming the speaker of the day, CA Abhishek Sanyal. Uh, Mr. Sanyal, since this is a virtual seminar, we have this small e-token for you as a memento that you would like to share with you. I hope it's visible to you.
Yes, thank you so much. Thank you so much,
So,
Devayon, and thank you to the organizers of ACAE for inviting me to deliver a virtual lecture regarding GSTR-9 and 9C.
so, without wasting any time, it's over to the initiator of this group discussion.
Okay. So, good afternoon, all of you. So, let's start our group discussion regarding the GSTR-9 and 9C for the financial year 2024-25. Well, right at the beginning, what I would like to say is that this 2024 and 25's 9 and 9C marks a very interesting transitional phase in the history of GST so far in these 8 years, what we have seen in the journey of the goods and services tax. Why? First of all, in today's session, I will try to get into the form details, the format details, all that is okay. That is going to be a part of today's discussion. But the most important part is that we are all chartered accountants and tax professionals. So what I intend to do is that let's not make this discussion just merely a 9 and 9C form filing exercise that even our articled assistants and our assistants will be able to do it. But why is this 9 and 9C important in the first place? It is so important in the first place because this statement of reconciliation, this statement of facts acts as a very important line of defense in the litigations which we face regarding GST each and every year. That litigation can happen in the form of basic scrutinies under section 61, which our clients usually get that, sir, we have received an ASMT 10 notice. There are so and so discrepancies. Please solve the matter. You can face litigation in the form of departmental audits under section 65 that may get into detailed questionnaires, and from there adjudications, and so it progresses. Now, this has been happening each and every year. Now, why in this year particularly, 2024 and 25, I am referring this.
Sir,
Yes. Okay. So why in this year particularly, I am referring it as a transitional and very important phase in the history of GST. Well, there are certain changes in the form filing formats. We have all seen the forms regarding table 6, ITC utilization, cross years, different years ITC availed, and then we whether we have reversed them or whether we are reutilizing the same. That is okay. That is just the procedural part. But this year, particularly from 2024-25, with the effect of the Finance Act number 2, 2024, Section 74A has come into effect. So this year's annual returns will be the first one which will face adjudication under Section 74A for the first time, and not under Section 73 or 74, which we used to face earlier. So this marks the very important transition for our future litigation strategies as well, because 9 and 9Cs are very important documents. Although from 2020 and 21, our rights, that is the power of chartered accountants to attest form 9C has been taken away, has been done away with. But still then, these 9 and 9C are very important documents, and we need to guide our clients accordingly to safeguard in case of any future litigations which they face. Now, before getting into 9 and 9C further, I would like to brief a little on this new Section 74A, because this adjudication is very much different in comparison to the earlier 73 and 74. Now, why is this 74A different? Earlier, the Section 73 used to deal with the non-frauds and non-willful suppression cases. We all know that. 74 used to deal with your frauds and your willful suppression cases. Okay, we all know that. Now, did Section 73 and 74 have any specific time limit to issue show cause notices? What were the wordings of Section 73 and 74? Well, what 73 stated is that the time limit for passing an order under Section 73 was 3 years from the due date of filing of the annual returns, that is 9 and 9C, 3 years from the due date of filing of annual returns. And the time limit for issuing the show cause notice was at least 3 months before the due date of passing of the order. And for 74, this very time limit for passing the order was within 5 years from the due date of filing of the annual returns, and the time limit to issue show cause notice was at least 6 months before the due date of passing the order. So 73 and 74 never had any, yes. So 4 years, 6 months. So 73 and 74, the wordings never specifically mentioned any time limit to issue the show cause notices. It was just at least 3 months before or at least 6 months before passing of the adjudication order. But now 74A is markedly different from the earlier 73 and 74. How? 74A is giving you entirely a new time limit. That is the time limit of issuing the show cause notice is within 42 months. 42 months from the due date of filing of the annual returns. So this is the first time the proper officer is getting an adequate defined time limit to issue you the show cause notice. Now many will say that the fraud and non-fraud distinctions have been taken away with. I will say no. The fraud and non-fraud distinctions still remain. These distinctions still remain very much, but earlier the time limit for adjudication for non-fraud cases was much less. Now this has increased, and practically this time limit is being merged with the fraud cases. So this is the bad effect which has taken place in the form of your section 74A. Now, since this is a program regarding your annual returns, I am not going to go much into the details of 74A and all that, but now I will come into 9 and 9C one by one, and we'll try to explain to you in the form of this virtual meeting that how to safeguard our clients regarding the possible litigation situations that may arise. So let me now start sharing my screen first. So is my screen visible? Acha, one thing please.
Yes,
okay.
It is visible.
Okay, so one thing, please do make this chat session interactive. I will be checking your chat messages. So if you have any queries or any questions, please do message me in the chat inbox so that everyone can read those. Even I will learn from those queries as well. If possible, you can unmute yourself and can ask visual questions as well. That is also okay with me. No problem. So whichever way you feel comfortable, please do make this virtual session interactive. So our strategies is going to be 9 and 9C. How this 9 and 9C is going to be different than the earlier ones till what we used to do in financial year 23-24, and how it is going to be different in 24-25. So our aim is not just going to be restricted to reconciliation. We will try to explore the possible risk areas and with suitable litigation preparedness on behalf of our clients. So like I had already said you that this year's annual return isn't just a form. It's a legal document under section 44. That is, all annual returns come under section 44 that can either protect or expose you. That can either protect or expose you in the scrutiny. Okay. So like I have already said that the financial year 24-25 is the first year we apply section 74A in place of 73 and 74. So our compliance strategy has to evolve from mere reporting to risk preemption. That is, we have to employ preemptive strategies to mitigate all the possible risk scenarios. The department now mines GSTR-9 and 9C data before sending ASMT10 or DRC01A. So every disclosure must be audit defensible. In my earlier seminars at various other forums, what I have used to state is that, what I have said earlier is that how the department collects data for the ASMD 10 notices which you get. That is the basic simple scrutiny notices under section 61. If you have any standard Bayer Act of GST with you, you will see that there are standard operating procedures of data collection by the department. Like there are standard operating procedures for inspection, there are standard operating procedures for data collection by the department as well. Very few of us take care to go through those data collection processes. But if you want to develop yourself as a litigation professional, I would definitely suggest you, all of you, at least go through these data collection procedures, standard operating procedures once, because that is going to be very helpful. What I have seen personally is that while issuing those ASMT 10 discrepancies and all that, they take data from the table 8A summary of your annual returns for 2017, 18, 18, 19, 19, 20, even till 2021, 22, whose scrutiny notices we are facing now. They used to take data from the table 8A generated summaries of your GSTR-9. Now, what we have seen is that those table 8A data usually takes your GSTR-2A summary up to a certain cutoff date, not even the 2B summaries. Because in many cases, while attending on behalf of my clients, I have seen is that they have given you that, yes, you have claimed your ITC input tax credit as per GSTR-3B so much. But as per 2A and all that, we are seeing that this was available to you. So you have availed more ITC than which was actually available to you. Now, while going through these notices, we usually tend to go for further reconciliations. But at this juncture, I would like to hit the pause button a little bit, because we chartered accountants are usually very good at keeping those reconciliations, preparing further reconciliation sheets and all that. But there are certain very interesting data which this GSTN portal generates each and every day. We need to go into the depth of the GSTN portal as well. In the GSTN portal, for every year, we will see there is a particular table right in your dashboard of the client. What does that table show? That table is known as the tax liabilities and ITC comparison table. Okay. For every year, you will see a table called tax liabilities and ITC comparison table. That table, every year at the back end, that table is even prepared after the data has been generated for the GSTR-9 table 8A summary and all that. It keeps on updating itself on a regular basis, even after the summaries for the GSTR-9 have been generated. Now, obviously, after 8 years, the I am very sorry that the charger of my laptop is doing a bit of malfunction today. So I lost the connection on my laptop. Well, no problem. I am going to deliver this through my mobile as well. Like every year in your GST portal, a data generates at the back end of the GST portal. Now, what does it state? That is called the tax liabilities and ITC comparison table. Okay. Now, what we have seen is that even after the generation of the GSTR-9 9C data, all that in your table 8A, this data keeps on updating on a day-to-day basis. Now, obviously, in year 2024-25, we will see a real-time updation of the data as the quality of the maintenance of GSTN portal has evolved and improved a lot. But for the earlier years, when our clients used to receive those ASMT 10 notices, what we have seen is that even when those notices stated certain discrepancies, when I checked that very tax liabilities and ITC comparison table, the data generated there is much different than the data being stated by the department. Now, after going through some test cases, I used to wonder why this is happening. Well, the department is taking the data. What I found out is that the department is actually taking the data of your table 8A, which is freezed at a particular point of time. Like in 2017-18 and the earlier years, there was only the concept of GSTR-2A in the beginning, as we all know. There was no GSTR-2B at that point of time. So people used to file their GSTR-1 returns throughout the year, even after the end of the financial years. And those B2B invoices, that is our inputs, used to get updated at a much later date. This was the case. But in the GSTR-2A summary, that did not come into picture. But this tax liabilities and ITC comparison table updated all this data at the back end, including all those late filed GSTR-1 returns, B2B invoices. So while replying to the simple your basic scrutiny notice, I had to take into account that tax liabilities and ITC comparison table as well, which helped me win quite a few number of cases. Okay. And while appearing for these your scrutiny hearings, what I found out is that even very few departmental people, the officers, had knowledge about these tax liabilities and ITC comparison table. They used to say, Mr. Sanyal, from where are you getting this information? We don't get this in our end of the portal. Then I had to give them the screenshot of those portals, the printouts generated from the portals and all that. Yes, sir, this is actually the state of the affairs of the GSTN portal. So the point is that we have to take into account the technicalities of the GSTN portal as well while filing the GSTR-9 and 9C, because this is very much important. Now, since I am appearing from the mobile, it might be difficult for me to give the screenshots, but don't worry. I will give you the matter of the PPT at the end of this class. Don't worry, the way I will deliver the lectures, it will not be you will not be required to view the PPT during this session. After the completion of the session, I shall give you the PPTs. Like I was mentioning right at the beginning, I was mentioning, am I visible?
You were audible, but not visible.
Okay, wait. Let me minimize this a bit.
Yes.
Am I visible now?
Yes, you are.
Okay, thank you. Like I had already mentioned to you at the beginning, by touching the section 74A a bit, that the time limit for issue of notice is 42 months from the annual return due date. So I would personally advise all professionals who are doing the GSTR-9 and 9C work this year to please retain your working papers for at least 5 years. That is my personal advice to all of you, that please retain your working papers for at least 5 years. Because for financial year 23-24 and earlier, we are getting those section 73 and 74 notices. So a dual litigation environment still exists. So we need to clear documentation to distinguish years governed by old and new. Well, last few days back, a very learned friend of mine took an advice regarding me. His client was issued a section 73 or 74 notice like that for financial year 2024-25. At this point of time, he sought my advice and asked, what should I do? I just said to him, since section 74 proceedings have started, please don't say anything now. Let the department make the mistake, commit the mistake, let them pass an adjudicating order under section 74 for this 2024-25 financial year. Because as the department passes the adjudication order under the wrong section, you can challenge the validity of it in the appeal and get the entire demand order quashed. So we have to take very clear steps to demarcate our working papers for the earlier adjudication periods and this period. Now, what is the most important thing of this GSTR-9 this year? This year, you might have all downloaded the PDF versions of GSTR-9 and 9C this year from various online platforms. Well, according to me, the most important part is the table 6A column 1. According to me, this is the game changer. So please take a note that table A6A1 is the game changer. Why? Because it captures cross-year ITC adjustments. Now, what is the simple case of a cross-year ITC adjustment? Well, I am taking the example of a simple Rule 37 ITC reversal. What is that? Suppose you have purchased some goods from your client. Okay, well and good. You have purchased some goods. Now, your client has taken the ITC of the same, but he has not made any payment. He has not made any payment to the supplier. So, as per section 16, since if no payment is made to the supplier within 180 days from the date of purchase, you have to reverse your ITC. So I have reversed my ITC. Now my client makes payment to the supplier after the expiry of 180 days. So after reversal, I am again eligible to reclaim that ITC. So this is a simple case. Now what happens that both these situations arise in two different financial years. So that is the example of a cross-year ITC adjustment. Simple example that before March 25, my client reversed the ITC, and in April or May 25, after making the payment, my client again reclaimed the ITC. So this can happen. So this table 6A1 is the game changer. And now the usual table 8A, which was the ITC summary, which used to generate in the table, which used to generate in the GSTR-9. Now this has also changed. How? Earlier, this table 8A used to take data from GSTR-2A and 2B. Okay, now this year a marked distinction has come in. What is this transition? Now table 8A is going to draw its data from the invoice management system or the IMS. Okay, so this has changed. Now from last year, the invoice management system or the IMS came into place. So whereby while filing the regular monthly GSTR-3B returns, we had to go to the invoice management system portal and accept the B2B invoices or the credit notes or reject the same or kept them pending. So from there, our GSTR-2B got computed. So that system had already come in place last year. So in this 2024-25 GSTR-9, that is the table 8A or the input tax credit summary, the entire data is going to generate from the IMS. So we all professionals must audit the logic of each auto-populated figure before certifying the return. Now, why? Like just a few minutes back, I had stated that the tax to you about the tax liabilities in the ITC comparison table. Very few of us take adequate care to go through those tax liabilities and ITC comparison table while drafting the replies of our clients. But that is essential. Likewise, from this year, you will have to check that why there is a mismatch in this table 6 and 8. Why there is a mismatch in this table 6 and 8? This is going to be the top grounds for any GST litigations from now on. That is the DRC 01A intimations or the ASMT 10s or 65 audit proceedings, this mismatch in table 6 and 8 are going to be the top grounds for litigations. Even minor errors in cross-year ITC disclosures can invite 74A proceedings. Like your client reversed the credit in that financial year, but again reclaimed it in this financial year. So this has to be properly documented and covered in table 6A1 of the GSTR-9. Now, let me check whether there are any questions or not. I don't think any question has arisen. So let me go back to my main lecture. So now let me come to the most critical part, that is the input tax credit or the table 6 availment details. This is the most important. Now table 6, it consists of tables parts A to L. This is quite normal. We have the breakup of ITC availed in books and returns. Now, how is it auto-populated? Partly from GSTR-3B, plus sometimes we might manually intervene and change this. Now, this was the usual practice. Now, the new table 6A1, that is going to be cross-year ITC reclaim window. So my dear friends, please make a star mark of this new table 6 capital A1. This is going to be the cross-year ITC reclaim window. This was not there in the previous years GSTR-9 and 9C, which you have been facing for all these past 7 years. Now, after table 6A1, we have to verify the ineligible ITC. Now, what are those ineligible ITCs? We all know it. That is the section 17 subsection 5 or the blocked ITC versus reversed ITC. How much ITC we have reversed during the financial years under rule 42-43. That is also going to be there. Now let me cite this with another example. Table 6 is the place where our story of input tax credit begins. For financial year 24-25, CBIC has inserted table 6A1 capturing ITC reversed in prior years but re-availed these years after eligibility proof. I have already discussed this. So in this place, this has been discussed with an example. For example, in financial year 23-24, ITC of rupees 1 lakh was reversed under Rule 37A and reclaimed in financial year 24-25. So where this should take place? Now, in this new GSTR-9, this rupees 1 lakh must sit in table 6A1 and not 6B. So we have to keep a working paper trail for each and every ITC reclaimed. Otherwise, the department might treat this one as a double claim under 74A. So my advice to all of you is that while you are doing any assignment of GSTR-9 or 9C on behalf of your client, please go through that ITC reclaim table. Please check the books of accounts and also go through the ITC reclaimed, that how and when those ITCs were reversed earlier and when it has been reclaimed and how it has been reclaimed. Please check the accounting details for the same and please check the total of the entire year's reclaimed ITC in the table 6A1. Just don't rely on the pre-filled data. Please go through the books of accounts of your clients, then check the GSTN portal and then make your comparison. Okay, so that's most important. What we tend to do is that अच्छा ये तो प्रीफिल्ड होके आ गया है तो मतलब ये ठीक है, ऐसा नहीं चलेगा। आपको आपका क्लाइंट्स का बुक्स ऑफ अकाउंट्स भी देखना है, उसके साथ आपको पोर्टल का डेटा भी देखना है, दोनों को रिकॉन्साइल करना है, उसके बाद ही आप ये 6A1 कॉलम आप भरिएंगे। ओके, because this is going to be a very important litigation angle for the future, because the officers will now tally table 6A1 entries with previous year's reversal sheet, and from there the ASMT 10 calls or the scrutiny calls are going to be expected. That is going to be the basic. Now reversals and ineligible ITC. As I have already discussed, there is a reversal under Rule 37, that is non-payment within 180 days. That comes under your table 7A. Okay, that comes under your table 7A. Now, table 7B, that is the reversal under Rule 39. What is that? Your input service distributor case. That is 7B. 7C, Rule 42. That is input and input services, and 7D, that is Rule 43 or capital goods. 7E is the ineligible ITC under section 17 subsection 5, and 7H deals with other reversals. So this is the basic case of the reversals and ineligible ITC. All comes under table 7. From 7A, B, C, D, E and H. So these tables tell the department, why did you not claim credit? The common mistake is misclassifying ineligible ITC as reversal. Okay, remember ineligible never entered 3B, so it can't be reversed. So practically for this sort of a situation, prepare a 3-column reconciliation sheet for each type. I would suggest all of you that why did you reverse this? How much is the amount? Which rule are you applying? Now for 2024-25, Rule 37A creates automatic reversal for non-payment within 180 days. So as I was discussing, do audit the vendor ledgers or the party ledgers of your client and keep them ready while preparing the 9, because this is going to act as the proof of subsequent payment and reclaim under 6A1. So while you are auditing or doing the 9 reconciliation, GSTR-9 reconciliation, 9C reconciliation for your clients, please do check those suppliers, ledgers or the creditors, simply the creditors, regarding which your client reversed the ITC and again reclaimed the ITC. So that ledger is also going to be very handy for you, that workings. If possible, I would also suggest, since this table 6A1 is a new insertion, and we all know while litigating for our clients, what is the quality of the knowledge of the officers of the GST department, especially the quality of knowledge of the adjudicating officers. I'm not referring to the appeal commissioners or the tribunals, but the basic adjudicating officers. is not very good. It's not up to the mark. So as a suggestion, what I would like to say is that first you do a detailed scanning of the party ledgers of your client, especially those suppliers where you have reversed and reclaimed. Make a detailed summary of that. Prepare a detailed summary of that. After that, if possible, ask your client to get a confirmation from those suppliers that yes, we received our payments on so and so date and we had supplied the goods or services to you on so and so date. So that is going to be very handy while appearing for the litigation, because many a times what we have seen is that even in the earlier years of 17, 18, 18, 19 or 19, 20, the officers used to insist us for physical confirmation from the suppliers. Like certain suppliers used to enter the genuine B2B supplies as B2C. Now they had entered them as B2C by mistake. But our invoice, our payment evidences, all these were genuine. Now what happened is that the department said that please go and take a confirmation from your supplier that whether they actually supplied the same to you or not. Certain interdepartmental circulars were also issued in this respect as well. So by taking the reference of that, for a practical purpose, I would suggest that please take a confirmation from those suppliers where you have reversed and then again reclaimed. And another suggestion is that while going through the 7A to H, A, B, C, D, E, and H, please take adequate care to ensure the correct categorization. Like suppose if there is a case of 7E ineligible and you have placed that amount in 7H other reversals, that can be a wrong one. That can be a wrong one, and that can trigger your ASMT 10 discrepancy note. So all these things have to be documented. Yes, we are not signing the 9Cs and all that. That's okay. But for a proper documentation and reconciliation work, this 9 and 9C is of vital importance. Because this is actually 9 and 9C is actually the last line of defense before your file goes for a litigation. Now I am coming to the table 8. What is table 8? Table 8 deals with ITC reconciliation. It generally deals with ITC reconciliation. Now previously all the data came from GSTR-2A and 2B. That is the ITC actually available and the ITC actually availed as per GSTR-3B. Now for the first year, this is going to come from the invoice management system. So again, this is an important line of caution that while reconciling, please do see the invoice management systems of each and every month. That which invoices were accepted by your clients. Okay, I will always admit that this much of detailed work is not possible for small clients. Yes, like the cases for your 2 crores turnover and all that, it might not be possible. But in that case, please make a cutoff of the turnover. If you are having large clients, like turnovers above 5 crores and all that, or 10 crores and above and all that, we can start this process from there. Because you see, if you have taken a credit by accepting the invoice in that IMS, now you want to reverse it. So all these things require due care. All these things require due care, due checking and examination. So it takes time. Yes, for ordinary clients with just turnover of 2 crores or 3 crores, that might not be possible in so much great detail. But my advice to people dealing with larger clients, having larger turnovers, you can experiment this process from this year itself by checking the details of the invoice management system for each and every month. Now, table 8A, which comes under the table 8. Table 8A will auto pull the data from the IMS data, that is the invoice management system. This is the new thing for 24-25. So, like I was mentioning, they are going to auto populate the data from the IMS. But please do check whether that auto population is correct or not. Because like in income tax also, this year we have seen there have been technical glitches in the annual information systems and all that. We have seen. So just आप पोर्टल के ऊपर ब्लाइंडली रिलाई मत कीजिए कि ये पोर्टल से तो निकल गया है तो ये ठीक ही रहेगा, ऐसा नहीं है, आपको बारीकी से सब कुछ देखना पड़ेगा. So 8A is a new one, 8A column. 8B is the usual ITC as per GSTR-2B that generates every year. 8C is ITC claimed in GSTR-3B up to September of next financial year. Okay, that's also normal. Now 8D to F deals with mismatches and adjustments. So in here I will again like to press a pause button a little bit, because suppose your client has made some payments which has not been routed through the monthly, GSTR-3B return. This can happen. Your client has made certain payments. So I would suggest all of you to please cross check the DRC0 payment, DRC03 payments, if any, has been made by your client for the entire financial year. Please cross check with the DRC03 payments, because earlier the table 8A was static based on GSTR-2B for the whole year. Now the portal shows IMS data, every invoice accepted, modified or flagged under the IMS since year April 2024. So we can use this as an analytics, not as a liability. Like I said, do not blindly rely on autofill. A clean approach to create, please do create your own working papers. This is my suggestion this year. Like in one part of the working paper, keep a track of the IMS data. In another part, check the 2B. In another part, check whether you have made any payment through any DRC03 and all that. So this is going to be your important defense paper in case of any scrutiny. Now, one litigation angle, that is one possible litigation angle, is that most section 74A cases will come from this table only. Yes, the table 8. Officers might treat difference in 8D, that is 8D. Now, what is 8D? That is mismatches and adjustments as excess ITC availed. This can happen. So prepare a pairwise explanation sheet and attach DRC03 payment as proof where any voluntary payment has been done. So this is very important this year. So our work as professionals, as consultants, as analysts has become much more detailed this year. So from a comic angle, like now many of you can say me is that sir इतना काम बढ़ गया तो फीस तो ज्यादा मिलना चाहिए. पहले तो 9-9C तो आधा घंटा में एक क्लाइंट का हो जाता था. Actually this year the work has increased substantially. So that's why I am advising, please take a turnover wise cutoff. For smaller clients, it might not be possible to get into such details. For smaller clients, there might be much lesser complications. But for larger clients, like there might be cases of credit notes, there might be cases of reversals and all that. All those cases of inputs availed and then again taken away. These needs to be checked and accounted for this year in much greater detail. Now I am gradually coming to the GSTR-9C, that is purpose and relevance for financial year 2024-25 onwards. Now, as we all know that GSTR-9C is the books versus returns reconciliation. We all know about the applicable limit, that is the aggregate turnover has to be 5 crores and above. Okay, so previously there used to be a CA or a CMA certification. It has been done away with long time back from 21-22 onwards. But with so many changes and all that, the audit objective remains the completedness and the possible defense strategies for our client in case of any litigations. Okay. Now, before going into the 9C in greater detail, let me narrate you a case which I faced. How 9C became an important savior for my client. How correct reporting in 9C became an important savior for my client. Like in from 18th July 2022, what happened is that one of my clients was engaged in providing construction or works contract related services to certain government departments. Now, before 18 July 2022, the applicable GST rate for such services for the government contractors, as you all know, was 12% only. And with effect from 18 July 2022, this rate increased to 18%. Okay. Now what happened is that my client had certain projects, the tenders of which, the contracts of which were awarded and the work was done much before this cutoff date of 18 July. But the payments were received at a later date. Now what happened is that suddenly for the old works, my client paid taxes at the earlier lower rate of 12%. In the respective GSTR-3Bs and GSTR-1s, those were filed in time. But after 2 to 3 years, now suddenly what happened is that in this very March itself, my client received a letter from from the Department of your Revenue Intelligence. Now, what this letter stated is that your applicable GST rate on this service increased to 18% from this date. But we have found from the GSTR 3Bs filed by you that you have paid taxes at lower rates of 12% in the months of August, September, October, November, etc., etc. And they clearly made a table-wise details of the same. So on these low-paid taxes, they demanded that additional 6% of tax. They calculated that additional 6% of tax, which came to a hopping amount of more than 1 crore and all that. And after payment of tax, they said you will have to pay applicable interest as well. Now, my client came to me with this letter. At this stage, he did not have any proper idea of the GSTR-9 and 9C filed for those years. Okay, well and good. In fact, the accountant or the staff who he had at that time, he had also left. He was not working with this organization anymore. Now he came to me. Hey, Mr. Sanyal, what should I do? At this stage, I said, Mr. X, I am not naming my client, so I am referring as Mr. X. Mr. X, please do one thing. Please do one thing. Please give me the GSTR-9 and the 9Cs filed for those years. Okay. So this was the first thing which I asked from him. In the 9 and 9Cs, it was very well prepared, because what happened is that what I found out is that the person who prepared the 9C, did refer these cases. In certain cases, he clearly said that since these projects were completed at the earlier dates, the old rates apply as per section 14 of GST Act, of CGST Act. Well and good. And in certain cases where the projects were completed after the cutoff date, the new rates apply. And for those new rates, certain payments were made through DRC-03 voluntarily. This is the interesting thing. And all those DRC-03 payment evidences were referred to in GSTR-9C. All those payment evidences were referred to in GSTR-9C. So that's how this entire thing became crystal clear. And while replying to the actual letter from the department, I referred to this entire 9C state of affairs to them. And yes, after that, since then, it was in March 2025, since then, no further cross rebuttal has come to me from the department. Already November has passed, so it's almost 7 to 8 months have passed. No further cross rebuttals have come from the department. So that's why I, before going into the 9C in detail, what I wanted to say is that if there are any differences, like your client has made any voluntarily DRC-03 payment, please do mention the date, the cause of payment, and the acknowledgement reference number or the ARN number of the DRC-03 made in your respective GSTR-9C, because that is going to be important. Likewise, in any scrutiny, any departmental audit, any adjudication, they don't usually call for the 9 and 9C in GSTR-9 and 9C at the beginning. But as tax litigation professionals, as GST litigation professionals, it's our duty to check the authenticity of those 9 and 9C, and if possible, fill in the blanks. That is, the necessary filling in the blanks can be done through the help of this GSTR-9C only. Now I am coming into the detail. That is what we have to do. We have to basically check the accuracy of the turnover. First, we have to check whether the GSTR-9 turnover is matching with that of the income tax returns, audited books of accounts. There might be a possibility that there are differences in this regard. There might be a possibility. Now, like a simple case I am referring to is that, though it is very rare nowadays, but it might happen that someone might be following your inclusive turnover, that is tax inclusive turnover, that is the turnover is inclusive of the taxes paid. He is following in his audited accounts that principle that the turnover is inclusive of the taxes paid. So your taxable turnover and the actual turnover as the books of accounts might not match to that extent. This can happen. In other cases, there might be a possibility that there are several branches, all India branches in various states of this client. You might be doing the GSTR-9 on 9C at a branch level only, and this is going to be consolidated at the head office level at a later date, at a later stage. So that might be a possibility. Or there might be other possibilities as well. There might be other possibilities as well. Like in the regularly filed GSTR-1s and 3Bs, your client might not have disclosed that part of the turnover. Like a B2B invoice was missed in the March GSTR-1 and 3B. That might have been filed at a later date. So so that can be the cause of difference as well. So there are various cases where there might be turnover mismatches between the books of accounts and the actual taxable turnover as per GSTR-9. So these needs to be checked because in the first part, that is the part A of the 9C, part A of your 9C, you need to at first you need to check these whether there are any unbilled revenue, advances, credit notes, all that. Then we have to reconcile these with the books for rate classification, for rate or classification errors or any other thing. Now, what they are trying is that this year they have inserted a DRC03 disclosure box. DRC03 disclosure box, and this is going to be auto linked. So this is going to be a much, again, I am pressing the pause button. So this DRC03 disclosure box is going to be with an auto linked box is going to be a very important marked difference from the earlier years. So personally, I would, as a suggestion, I would advise all of you that please do attach notes for each variance. Like now you might ask that for how much variance should we attach notes? At a personal level, I am saying that you can write a note anything above rupees 2 lakhs, 2.5 lakhs or greater than equal to 5 lakhs. Please please draw a sample based upon your experience with the client. Like if you know the client's business on a regular basis, you know how much variance can happen. Now, if a client is coming to you only for the purpose of filing GSTR-9 and 9C, that can also happen. So there you need to go through the details of 26As, the audited books of accounts and all that to a greater extent. Now, The departmental officers now match GSTR-9C turnover with the 26 A's and E invoice data. Yes, hence we should never ignore minor classification differences between books and returns documents, and we should all document them in Part A notes. For example, like I was mentioning, a contract income booked in April 2024 but reported in March 2025 return needs a reversal note and a cross link to DRC-03 if any tax is paid. The beauty of this section is that it lets us correct past gaps with voluntary payment and disclosure before scrutiny arrives. So this documentation of DRC-03 is very important. From a litigation angle, as I have already said, if the auditor fails to disclose variances in Part A notes, but they surface later in ASMT 10, it is treated as suppression with intent. It can happen. So write proactive disclosures even for ₹1,000 differences. On this case, I am again drawing a pause button. Like if you are preparing, if you are filing or making any payment via DRC-03 for your client, in the narration, please properly mention that for which financial year this is applying for and for what purpose you are making the payment. Please do mention it clearly in the narration, because I have faced certain practical issues regarding this. Why? Now I am diverting a bit. The GSTN has given us certain FAQs regarding the utilization of DRC-03 against DRC-03A. Like from February, March this year, the DRC-03A is a new feature that has come in. We have seen this application of DRC-03A first while applying the amnesty scheme. Okay, so first while making payment and offsetting our liabilities, tax liabilities, while appearing for the amnesty scheme. Yes, but the functionality of this DRC-03A is not restricted only to the application of amnesty scheme. The functionality of this DRC-03A is continuing, and the GSTN authorities have released certain FAQs on this. Like what they are saying, if you have any unutilized previous years DRC-03 for any financial year, you can offset it against the tax liability of any financial year by using the DRC-03A. This is what they have mentioned in the FAQ released by your GSTN authorities. But while practically doing the same, I found out certain errors are appearing. Okay, although they have said in the FAQ that you can offset it against the tax liability of any year, but certain errors appeared and I was unable to offset the tax liabilities. Now I raised this in the grievance. After a month of my raising the grievance, got a call from the Infosys itself. Some of my friends know about this. Got a call from Infosys itself. They were unable to solve the issue from their backend. Like in the technological terms, certain patches of software errors were appearing. So they invited me for a meeting with them, a virtual meeting with them. I clearly demonstrated what was the problem. They took live screenshots. These discussions went with different hierarchies of Infosys people who are engaged with the maintenance of your GSTN portal for more than a month. but even till date, I have not received any possible solution for the same. So I might have to appear in the tribunal for my client even after having unutilized, even after having valid DRC 03. So my suggestion to all of you is that while making any DRC 03 payment from this year, do specifically mention the year, and also in the narration do specifically mention the cause. Because like I said to you, जैसे मैंने कहा, ये डिपार्टमेंट के जो ऑफिसर्स है, इन लोगों को एडजुडिकेशन में इन लोगों को इतनी समझ नहीं है. आप शायद पेमेंट कर दिए हो, सब कर दिए हो, लेकिन वो नहीं, इसमें तो आपका तो ये ईयर लिखा नहीं है, तो मेरे को कैसे पता चलेगा कि ये पार्टिकुलर 2024-5 के लिए है, हम तो ये एक्सेप्ट नहीं करेंगे. So please do mention very clearly in the narration the year and the causes why you are making the payment. Now, like I have said, the ITC reconciliation is the very important part. While doing GSTR-9 also I have said this. Again, while doing GSTR-9C, I will again repeat the same. That is the table 12 of your 9C, where you have to reconcile ITC as per books versus returns. So my personal advice to all of you again will be, please segregate between the eligible, ineligible and reversal cases. Why I am saying this? Because many cases might come to you where the GSTR-9 has been filed by a different person altogether, and people are coming to you only for filing the GSTR-9C. So this gets more interesting, more delicate and more murkier. Why? Because the entire year's work has been done by someone else. You don't have any comfort with the data level provided by the client. Even the 9 has been filed by their regular consultant who might be properly trained, but also might not be properly trained. So he can be only an ordinary BCom graduate, just having basic filing knowledge of GSTR-3B, e-invoicing and all that. That means what happens? He is a quack and nothing more than that. He does not have any technical knowledge about the GSTN portal in detail and let's leave aside this year's huge changes. So he does not have, and he has also filed the 9 even before coming to you. So this is even interesting and even murkier. So here for people who will do 9C specifically, please do a proper reconciliation of the ITC as per books versus returns. Please segregate between eligible, ineligible and the reversal cases. Like I am again reiterating the fact once more that please take proper stock of events from your client about the reversals. Please do get into the supplier ledgers of the client where the reversals have been done, and please again get hold of those situations where these reversals were reclaimed later. So this mapping is going to be most essential. This mapping is going to be most essential. Likewise, what you can do on a simple basis, what you can do, we can even take the help of any good artificial intelligence for doing this MS Excel work. That helps. Even I, on a personal level, I do take the help of artificial intelligence for doing these sort of reconciliation works. It does help. But the thing is, it is any artificial intelligence. I am not naming any particular artificial intelligence in particular. All are good. It depends upon your comfort level. It depends upon your level of usage. but the prompt engineering is the most important part. Like if you give to any GPT to reconcile these returns and just give them two Excel sheets, that is not going to solve your purpose. You have to give them proper commands, the proper prompts that yes, Mr. GPT, please do these and these things for me. I require this for this and this purpose. Only after having that proper comfort level, it will be able to generate you the data for that purpose. Because for huge data sets, there might be data sets with huge B2B cases. For these, how will you do? So for these, it's better to take the help of the artificial intelligence. There are packaged softwares as well. I am not naming any packaged softwares, but I do take the help of artificial intelligence in these cases. So this is going to help you for this mapping, these reconciliations, all that, especially with the large data sets. Now, expense mapping for non-GST credits. Yes, that's also required. In that schedule, you have to mention purchases and other cases. These thing for better, just take the form 3CP 3CD, which you have already filed recently, that please give us the form 3CP 3CD or the 3CA 3CD and cross-link with the clause 44, that these are my GST credit expenses and these are my non-GST credit expenses. So that is going to help you in getting data for that table 14. So this is a quick fire shortcut. This is a quick fire shortcut. So again, I am going to the same, that is table 12 tells you how ITC has traveled throughout the year. If you have reversed anything in books but not in the returns, declare it here. Yes, like I was saying to all of you, that GSTR-9 has been filed by someone else. Now the assignment has only come to you for filing 9C. The assignment has only come to you for filing 9C. So in these cases, even you will have to mention these things in the notes below. The new portal version shows auto mismatch highlighting in red for auditor attention. Yes, like part B is not a mere signature. Yes, now there is no signature, but we are checking the compliance with section 16 to 19 and rules 36 to 43. So that's the importance of the part B of the GSTR-9C. That's the importance of the part B of the GSTR-9C. So here we have to cross-link this with clause 44 of the form 3CD, which we have recently filed. And also, if you have not been the statutory auditor of this company, please do check the Schedule 3 notes to prove that the expenses without GST are not business expenses in disguise. Please do check what the statutory auditor has written in his audit report. Please do check the Schedule 3 notes of the audited balance sheets. All these things are required. Checking all these things. Yes. Now, what can be a possible litigation angle? The department uses Part B of 9C to fix auditor responsibility in cases of negligent reporting. Hence, we should insert protective remarks like based on information produced before us for every material item. This is much required. This is much required. Although we are not signing the same, but we do need to have this note. Now, as I have already mentioned, likewise in the beginning, that this financial year 2024-25 is a great transition, because this is the first filing of the annual returns under section 74A. Previously, we had separate sections for 73 for non-fraud and 74 for fraud. Now, this is the one unified section for demand. The key is the time limit, which is 42 months from the annual return due date. This is the time limit for issuing of the show cause notice. So, our GSTR-9 becomes the legal starting point of departmental timeline. Like, what is the due date to file the annual returns? That is the 31st December 2025 for your financial year 24-25. So, our due date to issue the show cause notice starts from 31st December up to 42 months from this 31st December 2025. That is the due date of issuing of show cause notice. So, personally, I will advise everyone to maintain a proper master working file for 24-25. Get it signed by the management of the client for whom you are preparing the 9 and 9C. Get all the schedules indexed to defend future 74A queries, because this 9 and 9C final output as well as the working notes for preparing this 9 and 9C is going to be very important for your future litigation cases. Because like with the insertion of the 74A, GST litigation itself has undergone a paradigm shift, is going to undergo a paradigm shift. Our thinking, we are already programmed in our thinking regarding facing 73 and 74 cases, but that is gone now. That is over. From now on, we will have a dual litigation strategy. Like for earlier years, we will still have that 73, 74 programmed within our brain. But from now on, we have to additionally place 74A in our brain as well, in our psyche as well. That is going to be very important. So, what can be the possible scrutiny triggers that the department will hunt first? Please excuse. Don't worry, I will give you all these after the class. Since my laptop was suffering a technical snag, so I had to shift to my mobile. Don't worry, after the end of the class, I will give all these notes to you in the form of files. So don't worry about this. So what are the possible top red flags from where you can get your scrutiny notices? ITC mismatch. ITC mismatch is the first case which comes to our minds. Previously, it was between our audited books of accounts and GSTR-2B. That was the usual case. Now, this is going to be the IMS or the invoice management system versus your GSTR-9 and 9C. So this is the first shift of possible scrutiny trigger. मतलब क्या है, आपको जीएसटी लॉ के बारे में भी अच्छे तरीके से पता चलना है, आपका जहन में ये भी रहना चाहिए, और आपका जहन में ये जो टेक्निकलिटीज है, ये पोर्टल के जो टेक्निकलिटीज है जीएसटी पोर्टल, ये भी आपका जहन में आना चाहिए, क्योंकि GST litigation case is just not only about legalities, it is more and more about technicalities. Sometimes it is the technicalities, it is the knowledge of the technicalities which wins you the cases rather than going into the merits of the case. I have one certain cases just by using screenshots rather than going for those 20-30 pages of reconciliation. So these happen. So we need to identify the possible red flags for our preemptive surgeries. Now, turnover mismatch, the second case, turnover mismatch. This also I had mentioned while discussing 9C. How there can be turnover mismatches cases. Books, earlier it was books, your audited books versus GSTR-1 and 3B. Okay, so now we have to compare between the audited books versus GSTR-1 and 3B versus our AIS, that is the annual information systems. We need to check the business turnover, what is being shown in the annual information systems over there, versus 26 AS versus e-invoices. We have to tally all this and then check with the final books of accounts, which the income tax returns, all this we have to compare. Next is your normal GSTR-9 table 8, that is the unexplained gap. That is the table 8 D to H, which is the unexplained gap. We have to see what are the causes of the unexplained gaps. Whether those reversals were due to, for example, whether those were ineligible credits or those were other reversal cases. We have to check that. Why are you calling them ineligible? Whether those come under your section 17 subsection 5 or any other case. So for this, a separate working has to be made. Now, the fourth case, this also I have discussed extensively at the beginning. That is the cross-year ITC cross in table 6A1. While discussing your GSTR-9, I specifically mentioned about the table 6A1 right at the beginning. The cross-year ITC. Suppose your client reversed that ITC at the 2024 March, reclaimed that again in 2025 April or May. So for this, the cross-year ITC reversals and availment, which is the table 6A1 in GSTR-9, we have to go through this and we have to account for the proofs of each one of them. We cannot go without proof. Now, another possible trigger discussed adequately, again I am repeating, is that DRC-03 has been paid, but there is no narration or working papers. ऐसा नहीं चलेगा, आपको रखना पड़ेगा ये, नहीं तो लिटिगेशन में प्रॉब्लम दिक्कत आ सकती है. सिंपल ऐसे चीज के लिए क्या होता है, आप एडजुडिकेशन भी हार सकते हो, अपील भी हार सकते हो, आपको क्लाइंट को बेकार में आपको ट्राइब्यूनल या हाई कोर्ट जाना पड़ेगा, ऐसा सिंपल केसेस के लिए जो आप बेसिक में ही खत्म कर सकते हो एडजुडिकेशन फेज में. And the last case, possible case, there are high number of GSTR-9 adjustments, but in GSTR-3B throughout the year, there is no movement about those adjustments. So this might spark a curiosity in the mind of the officers regarding selection of your file for scrutiny. That yes, they have made so many GSTR-9 adjustments or 9C adjustments, but in GSTR-3B इतना डिफरेंस क्यों है? तो ऐसे कारण के लिए भी हो सकता है आपका स्क्रूटिनी रेड फ्लैग. But if you have proper documentation for the same, if you have proper working papers and all that and proper explanations and clarifications, there is no need to worry. लेकिन आपको ये सब रखना पड़ेगा. क्यों आपका आईटीसी का मिसमैच हुआ, क्यों आपका टर्नओवर का मिसमैच हुआ, why there is table 8 gap, that is whether it was ineligible or for what cause it is ineligible. Cross year ITC, DRC-03 paid, but it has to have a proper narration. So my point is that this year's scrutiny is changing from return based data to data intelligence based. This is the paradigm shift. Now, like I had already said, that convert your artificial intelligence into artificial human intelligence with proper prompts while doing this reconciliation. That is the need of the hour. So even for your scrutiny selection cases, this year scrutiny is changing from return based, just 9(9)C or just 3B, one summary, all that, to data intelligence based. Officers will correlate three systems. What systems? They will correlate your GSTN, which is the GSTN portal, which comprises of what? Your GSTR-1, 3B, 9, 9C and invoice management system. They will see this. They will correlate it with your income tax, that is AIS 26As and the ITRs filed, the tax audit reports filed. And again, the third and final correlation will be with your e-invoice plus e-waybill systems. So this is going to be the basic working of the GST department from their end. So most notices will arise from, the possibility is from unreconciled values and silent adjustments. साइलेंट एडजस्टमेंट सर अभी और नहीं चलेगा. अगर आप कुछ करते हो उसका प्रॉपर रिकॉर्डिंग 9C में एटलीस्ट मेंशन कर दीजिए. ये बाद में आपको 2-3 साल बाद जब आपका एडजुडिकेशन में जाएगा, अपील में जाएगा, ट्रिब्यूनल में जाएगा, बहुत आपको हेल्प करेगा, क्योंकि ये मैटर करता है. We just do the reconciliations, but we don't care about the possible litigation impacts for our client. So, being the consultants, we need to have a proper holistic approach about regarding the litigation impacts as well while filing any GST returns. Like for every DRC 03, we need a narration, we need a working file. Now I have going to discuss some possible smart DRC 03 strategies also, because according to this, voluntary payment is equal to protection. But how? Use DRC 03 proactively, not reactively. Okay, so how we will do it? Add narration referencing relevant table. एग्जाम्पल कैसे आप नरेशन लिखोगे, आपका किस कारण से आप DRC 03 पेमेंट कर रहे हो. फॉर एग्जाम्पल टेबल 6A रिक्लेम ऑडिट नोट, ऐसा लिखना पड़ेगा कि मैं 6A में ये रिक्लेम कर रहा हूं, 6A में ये रिवर्स कर रहा हूं, इसलिए मैं DRC 03 से पेमेंट कर रहा हूं, ये लिखना पड़ेगा आपको. अटैच वर्किंग पेपर्स, PDF, एक्सेल समरी. फॉर टर्नओवर्स रेफर ऑडिट नोट, नोट टू अकाउंट्स. ये मेंशन करना पड़ेगा कि हाँ कि ऑडिटेड बुक्स ऑफ अकाउंट्स में ये टर्नओवर था, इसका हिसाब से टैक्स ये था, मैं इसीलिए कर रहा हूं, ये मेंशन करना पड़ेगा. मेंटेन DRC 03 register year wise. This is very important. Although, like I said, although the GSTN has given an FAQ where they have said that DRC 03, any unutilized DRC 03 can be utilized for offsetting tax liability by DRC 03A for any financial year, but reality में ये नहीं हो रहा है. मैं जब करने गया इन्फोसिस के साथ तब नहीं हो पाया, इसलिए मेरे को भी लिटिगेशन में जाना पड़ेगा. आप ये भी लिख सकते हो एट द एंड ऑफ एनी DRC 03, paid to avoid future litigation without admitting liability. So this becomes a sort of a thing like taxes or duty paid under protest. This can also be done. This can also be done because क्यों मैं ये बोल रहा हूं, DRC 03 पेमेंट मतलब ही आपका admitting liability नहीं है. Like there is a very good case law of Bhumi Associates. If you are having any good case law compendium or summary book, Bhumi and Associates, That was regarding an inspection. I'm just going off the bit of the topic to say this. Why? Search seizure was taking place in a particular client. At that point, just the department threatened the SSC by saying that we will arrest you. We will arrest you. ऐसा टाइम पे क्या होता है, लोगों को मन में डर हो जाता है that there will be prestige loss, there will be what people will say, what will happen. So on a frightened, just by getting frightened and panicky, they paid the tax liability through DRC-03. अब क्या हुआ? After 2 days, when this entire fiasco was over, when normalcy returned, what happened? These Bhumi associates, they went for a litigation. The case was decided in the Honorable Gujarat High Court, Bhumi associates. Now, what happened is that the Department of Revenue contended by saying that no, they have paid taxes through DRC-03. It means that they have admitted the liability. This is the simple stand which the department took even in the court, in the writ petition court. Now, the Honorable Learned Judge of Gujarat High Court contended that since any payment made through DRC-03 cannot be taken as admission of payment. It cannot be taken as admission of the liability itself. Payment can be made under coercion as well. So there is a case law on this. So you can even use this narration in the DRC-03 if there is any litigation and all that paid to avoid future litigation without admitting liability. You can mention this disclaimer note as well. It can help you. Like you can, for DRC-03 narration, you can have your own standard set of phrases like cross year ITC reclaim, rate correction, financial year cutoff entries, like this. But a narration has to be there. Because क्या होता है, officers now look for no narration is equal to intent to hide. I have faced this in a litigation case. That's why I am telling this. DRC-03 with explanation helps avoid 74A invocation later. Yes. So now at the last, I have almost come at the last stage of my today's lecture. So how do you approach the 9 and 9C? I will give this entire master checklist to you, the document checklist, what you will do, while what you will require. This is going to help you a lot while addressing this year's 9 and 9C. I am hopeful about that. Since I cannot show you the screen now, let me discuss about this a bit, because almost I think 10-12 minutes are there. So let me go for around 5 minutes more. Now, what sort of documents checklist do you require? For books or for reconciliation checking of the books, first checklist, match turnover between books, GSTR-1, 3B, 9, 26As, AIS. This is the first basic thing, and the income tax return. Second checklist, if you are having export-oriented clients, so for this you have to verify the zero-rated turnover and the exempt supplies and the other exempt supplies with classification. This is for your rule 42 and 43. So for normal, check the turnover. For the export cases, we have to verify each zero-rated LUTs, that is the letter of undertakings and all this. Now for ITC validation checking, which is the second category, what do you require? Master checklist. Match, we have to match 2B versus books and reconcile it with 8A to 8C, that is the 8A to 8C table of the GSTR-9. 8A to 8C, I have already discussed while discussing GSTR-9 in greater details. Second important part is prepare 6A1 working paper for cross-year reclaims. 6A1 is the pivotal crux of this year's GSTR-9. This is the heart and soul of this year's GSTR-9. So while filling up 6A1, please take adequate care. Verify rule 42 and 43 computations, that is for exports and your exempt category, input reversals and all that. Now for liability and payment check, what do? We compare our tax paid in GSTR-9 with that of the entire summary of GSTR-3B. Record voluntary payments DRC-03 with narration. We need to check that. Disclosure check. This is my personal advice. That is notes for all variances above equal to or above rupees 1 lakh. But on a personal level, this might not be possible for all of you, for each and every client. For here, please do develop your sense of sampling based on your audit sense of prudence and materiality. What you feel important, what should be your cutoff. You know your client best, so it's for you to develop this cutoff level. Preserve correspondence proofs, HSN mismatch credit notes, etc. We need to even preserve the emails as well. Likewise, what happens is that sometimes my client, he is a distributor and dealer of some big healthcare products of that. There might be credit notes arising from the supplier from whom he is taking all this, from whom he is purchasing. Huge credit notes, huge quantum of credit notes, debit notes, etc. is there. Here, what I personally do, I take printouts of the mails as well and maintain a file of them, because those accounts of mails those emails are very valid evidences. Why? Because the mails which this client is receiving from his supplier exactly denotes the facts. It is an account, it's a statement of account, that for what purpose those credit notes have been issued, for what purpose those debit notes have been issued. So this is a very important for your adjustment entries in GSTR-9. So now I have come to the end of my discussion almost. It's 3:53. So at last, I am not again going into the mechanical aspects, because that you will read in my slide later tonight. So it's no point of going into a reading again of the same thing. But let's take this GSTR-9 and 9C bit analytically, because my intent to make this analytical discussion was this, that till date what I have felt and I have seen is that we take this exercise of GSTR-9 and 9C just as another form filing exercise. Friends, please ऐसा मत कीजिए, because what happens is that due to this mindset of ours, the clients suffer at the litigation stages. GSTR-9 and 9C, mark my words, this is the last line of defense for any future litigation. It has always been that. But we have never, very few of you do take adequate care while preparing 9 and 9C. Last line of defense. This is the goalkeeper. GSTR-9 and 9C acts just like a goalkeeper against the forwards of the opponent, that is the department. The department is going to attack you, and you have to build your own defensive strategies. You have to build your own defense and go for the counter attack. So we cannot go on attacking mode right at the beginning. Our game is to defend, have a good defensive strategy so the gaps are minimized, the gaps of errors are minimized, the gaps of possible litigations are minimized. We focus on those gaps, we focus on repairing those gaps, and then we go for the counter attack strategies in our drafting or in our appearance or in our pleadings or in our arguments. That is the way. So we are tax professionals. We are no longer just return filers. We are return defenders. Exactly. We are return defenders. Section 74A has made the annual return a litigation document in disguise. Exactly. The better our working papers and notes, the stronger our client's defense. Let's ensure that when the department opens the 74A file 3 years later, they find our explanations already waiting inside the return itself. So this 9 and 9C is going to help your client in the long run. Sometimes, yes, some of you may come and say that no, what happens, our clients pay so less, they don't understand. It's our way of communication that is going to correctly motivate the client. अगर हम ठीक से नहीं बोलेंगे कि ये 9 और 9C में है क्या, अगर हम खुद से समझेंगे नहीं कि 9 और 9C ए में क्या है, तो हम अपना क्लाइंट को कैसे समझेंगे? Because our aim should be to give a value-added service to our client. It is not just a mere form filing exercise. अगर हम इसको सिर्फ कॉम्प्लायंस के एंगल से देखेंगे तो फॉर्म फाइलिंग एक्सरसाइज बना देंगे कोई प्रॉपर एनालिसिस के बगैर, तो आप एज अ प्रोफेशनल अपने ड्यूटी सटीक तरीके से नहीं कर रहे हो एकदम. सो फॉर अस टू डू आवर ड्यूटी टू help our clients to give value-added services, we need to take care of that table 6A1. We need to take care of that table 8. We need to take care of each and every DRC 03. We need to take records of all these. We need to do reconciliation between your taxable turnover as per the GSTN portal and your AIS, TIS 26AS and the ITRs filed. So all this is required. If possible, we might even need to further get into the statutory auditor's notes as well. That might be required. In all cases, it might not be required, but it might be required. So better we have to program our brains into being an analyst and a proper consultant, not just merely a form filing exercise. Form filing to even an ordinary BCom graduate can do a form filing thing. So what is the purpose of going to a professional? Our clients are going to a professional only for proper advisory and consulting services. So our value creation opportunity is there in itself. So this 9 and 9C in my view is a great opportunity for all professionals this year, because this year this is going to add much value to our clients and not just going to be mere form filing, because litigations, GST litigations are getting complicated day by day. So पहले जो था कि नहीं GST में तो इतना litigations नहीं होगा शुरुआत के दिनों में, अभी वैसा नहीं है, बहुत litigations बढ़ गया है. Even for small and small parts, small and small issues, our clients are getting scrutiny notices. So these things are, minute details are very important. So I think it's time now. I am really sorry that I could not give you the slides during the session, as due to some technical snacks. But after the session, I will give you in the your ACAE group WhatsApp. I will give you the session. So I once again I thank the Association of Corporate Advisors and Executives for inviting me. This was a great opportunity for me because my late father was also a member of this highly esteemed organization long back. He passed away in 2020. So this was a very nostalgic occasion for me. I have learned a lot while regarding GST while attending your seminars in 2017-18 when you did the GST workshops and all. So this was a great occasion and a very nostalgic moment for me. And I am thankful to the ACAE Executive Committee and Group Discussion Committee.
Thank you so much, Mr. Sanyal. May I request the mentor of this group discussion committee, CA Indu Chandrat, past president of ACAE, to please address the gathering.
Thank you, Chairman, sir. And at the outset, I thank Abhishek, Sanyal for explaining GSTR-9 and 9C very minutely. And though I am not a indirect practitioner, but I really enjoyed your deliberation. And
Thank you.
even I thank the participants who are there. We have always about 75 participants. It shows the urge to learn. When we join group discussions, we learn more than what we can learn on our own. Thank you so much, Abhishek.
Thank you, sir. Thank you, sir.
Thank you, Chairman, sir.
I think there is no requirement of a formal vote of thanks after the mentor has already spoken and he has actually given the vote of thanks. We have a formality to do at the end, as we do every time. I would request for whoever it is possible to please switch on their videos so that we can keep a memory of this seminar. And I'll just take a screenshot. So I'll go for it now in next 5 seconds. Yes, it is done. So thank you very much. We will once again update you about the next topic, the next group discussion that we will be having within a fortnight's time. So thank you very much for joining. Looking forward to seeing you all once again. And thanks to the initiators, CEO Abhishek Sanyal, for taking out time from his busy schedule and helping us know a little bit more about GST. Thank you very much.